Welcome back to the Alchemist Nation podcast. My name is Walter Amarello, and I get the blessing to interview people in real estate all over the country, people who are successful millionaires, multimillionaires. Today, I've got with me a very special guest. We actually have a very similar coach, and I was learning a little bit before the podcast. I'm probably going to dive back into it. Paul Rossano, can you tell us a little bit about why you're such an amazing person to have on the podcast right now?
Well, I'm blessed as well. Thanks, Walter. I appreciate that, man. I'm blessed as well that I get to work with an incredibly brilliant gentleman by the name of George Anton. And I've been working with George for the last 6 years or so, a little over 6 years. And George is teaching the secret sauce, is the best way that I can describe it. It's like so many people bounce around all over the place trying to figure out the highest leveraged moves to build their wealth. And at the end of the day, everybody wants to build their wealth as efficiently as possible with the least amount of risk and in the most efficient and fastest ways possible. And essentially that's what George and I are teaching, is this topic, hacking finance.
And so hacking finance, I always ask for something controversial, and you're like, well, I think what we do is controversial. We're hacking finance, right? Like we hack the financial game. What is hacking finance, right? Like I actually got to watch you at the Boston Area Game. You spoke to our group, and so I know what it is. And the people who were there know what it is. Before my audience, what is hacking finance to you guys?
Yeah, great question. So in a nutshell, hacking finance, our definition of it is essentially leveraging the financial system to work for you instead of against you. So for those that don't know, the financial system is essentially rigged. I mean, it's designed to work against all of us. It's designed to work for the system and against us as consumers, as investors, as producers. So very powerful forces like inflation and interest, taxes, something called float, which is where are you keeping your money when you're holding it. So all of these forces essentially are designed to work against all of us, which basically makes it, the reality of it is that most people are swimming upstream financially. Even when you're making money, even when you're investing and generating a positive ROI, we're all swimming upstream financially because these forces are working against us. So hacking finance is teaching everybody who wants to learn this how to have those forces actually work for you, building your wealth for you on autopilot. So it literally goes from swimming upstream financially to swimming downstream financially.
So I like that you pointed out some four very powerful elements to finance that most people don't pay attention to. Float obviously is money that's in between, that's not being utilized by the people who own the money. It's held by somebody else. Then there's inflation, which is basically the government's secret tax. It's the easiest way for the government to take your money without you actually knowing they're taking your money. There's obviously tax, which they talk about and we talk about. But I think that inflation's actually taking more. I think that float takes a lot of opportunity away from people. And what was the other one you had mentioned, Paul? Interest. And interest is it's the little devil that we should be capitalizing on, but we don't, right? It's one of those tools that was set out years and years and decades, centuries, millennia ago, where people have been using that as a way to capitalize on their earnings. But it's working in reverse now, and it's always worked in reverse, right? The people who are smarter charge interest, and the people who have less pay interest.
Yeah.
So, Paul, what are some of the hacks that people can do right now, like a quick one, like a 30-second hack that somebody could implement, and they'd say, you know what, okay, maybe this is simple, but Paul's onto something here.
Mm-hmm. Well, at the end of the day, I'd say the most simple hack that you can be aware of is actually, so there's two sides of interest, right? So we're talking about interest as one of those forces. And the average American, just for some stats, spends 34.5% of their lifetime income just paying interest.
Wow.
So that's money that's just going out to banks and financial institutions, just in interest alone. And then another 35% of the average American's lifetime income is to taxes. You know, that's income tax, sales tax, all these taxes, right? So learning how to, one, recapture interest is really valuable and really important. And there's some hacks and some really amazing strategies to do that. But one of the things that, in this current economic climate, that is extremely powerful for people to use, which is why there's such a buyer frenzy in the real estate market, is because interest rates are so low currently. So when interest rates are this low and you can get long-term fixed rate debt for 30 years at 3% or 3.5% or 4%, Well, what that's doing is that's actually then having inflation work for you. So when you're borrowing money at a fixed rate for 30 years, the impact of inflation, the diminishing value of those dollars is now being impacted. The impact is felt by the lender, not by the borrower. So when you can use that type of strategic debt to go and acquire assets and encumber assets with this strategic debt, long-term fixed rate debt. Well, basically what's happening is over time, as the value of the asset goes up, you're paying a fixed rate for that money. So that's actually what has inflation and appreciation work for you, is that long-term fixed rate debt. If you went and bought a property free and clear, let's just say, and a lot of people do this. They think, great, I want to own property free and clear. I want to maximize my cash flow, which it does. If you own property free and clear, you're maximizing cash flow, which is great. But you're actually shooting yourself in the foot when it comes to the thing that's actually going to make you rich over time, which is appreciation.
Right.
So I'll just backtrack real quick and work a story in here. When George Anton was working for Intuit, which is a developer of some really powerful financial software like QuickBooks and Quicken Financial Planner. And when George was working at Intuit, and he was a developer for Quicken Financial Planner, which is the world's #1 personal finance software, he discovered this secret formula, and it's basically a break-even formula. And this formula shows basically what happens when you factor in inflation and taxes to what that does to your ability to move forward financially, even if you're generating a positive return on investment. And so the impact of inflation is enormous. And when you can have that working for you, there's several ways you can have it working for you, but long-term fixed rate debt, when you're encumbering assets that are appreciating, is one of those. And that break-even formula also shows that if you do own something free and clear, like real estate, even when it goes up, if you want to sell it and actually have that money in your bank account, you're paying taxes, and the impact of inflation on the dollars, you're literally probably losing money, even if the value of the asset went up over time when you do eventually sell it. So long-term fixed rate debt, now's a great time to get it and secure it for 30 years. And as long as you're encumbering assets that you're going to hold for an extended period of time, and the value of those assets is going to go up over time, then you're doing yourself a favor by getting that long-term fixed rate debt at such low rates right now.
It's funny because I talk about inflation a lot. I talk about inflation, deflation, stagnation, stagflation, and we've been in an inflationary market for a long time. And what we see is debt, like you're talking about debt. Like, this is the stuff you could buy a house with, not credit cards, but we'll say this represents mortgages, right?
Yeah.
But it could also represent education, right? I bought a lot of my education on these things. And I've also bought a lot of real estate, right? Like, these real estate little houses are bought with debt. And if you do it the right way, like you just said, like, the debt goes down in value. Like, the dollar amount may stay the same, but because the asset's going up in value, that debt becomes less and less significant. In fact, I have a house I bought 4 years ago, and I bought it for 170. And the debt on it currently today is about 150. So I've barely paid anything down. The principal's gone down very little, but it's now worth 330. And so you look at it, and thank God I took out that debt, because maybe I haven't tackled it so much in the last few years, but because it's inflated so much, bam, there's literally money working for you, right? By taking out debt and going and putting it into an asset that goes up. And obviously rents have gone higher, and that thing cash flows even more now than it did when I bought it. So Paul, you definitely, that was phenomenal for 30 seconds of value. You talked about T. Harv Eker before the call. Like, you've been around, you've been training, you've been teaching. In fact, but before you did that, before you were a master of this, you started with less knowledge. Where'd you come from originally? Like, how did you get into real estate in the first place? And just take us a little bit down the journey of how you got here.
Yeah, thanks for asking. Great question. So I graduated college in 1999 with a finance degree. I had no idea what I wanted to do with my life. I knew I didn't want to do a 9 to 5. I knew I didn't want to go into the corporate world. Just felt like everything and every cell in my body was like, that is not your path. And so I was, testing out a couple things. And about 6 months after I graduated college, I met a mentor who got me into real estate. And I'm from Long Island, New York. And now I live in San Diego. I moved out here about 8 years ago. But this was in 1999. I met this mentor who was a very young, successful real estate investor. and he owned a brokerage. And so I started working full time in the real estate industry when I was 21 years old.
Wow.
Working kind of like, this mentor took me under his wing. He's the same guy that got me into all the personal development stuff, Tony Robbins, and then T. Harv Eker, and like a whole bunch of other nonstop, just feeding my brain and feeding my mind with as much knowledge and information as I could. But yeah, that's how I got into real estate, was at the age of 21, full time, just dove headfirst right in. And basically I've been involved in real estate ever since.
That's pretty badass, Paul. So rental properties, at some point you own some rental properties. Do you still own them, or have you sold, and where you're at with rental property? What's your feeling on it?
Yeah. So I have owned rental properties. I've done, a lot in the residential space. And my feeling on rental properties is they can be great. Typically in most markets, now this isn't across the board, and I speak all over the country, so I get to like really get a feel for what's going on in the different markets all over the country. Most of the time, rental properties, and when we say rental properties, we're talking single family typically, right? And it might be 4 family or less. Is that what you're?
So typically my audience is multifamily, but yes, there are people who do single families, and they're still part of the audience. I've been doing a lot of syndication conversations lately, guys who have 1,000 units, but I'm in the small multi arena, 3 families, 5 families, condos.
Yeah, they're great. I mean, rental, if you're buying at the right, so they're good for cash flow. Obviously in different markets, they're going to be better for cash flow than in others. And one thing that I'll just add in is, no matter what, if you're buying rental properties, make sure you understand what a cap rate is, because a lot of brokers out there and a lot of newbie investors will say, oh, cap rates don't apply to single family, or they don't apply to, anything that's not commercial. But if you're investing for the purpose of income, you have to understand what a cap rate is. Yes. And also do yourself a favor and understand what a loan constant is too, because a lot of people are choosing their loans based on an interest rate. And banks are really great at enticing you to take shorter term loans, like a 15-year loan with a lower interest rate. Yep. But you're shooting yourself in the foot there as well. You're giving way more risk into your deals than you need to. Get those longer term loans, go with the higher interest rate, really understand what a loan constant is, and make sure you're choosing your loans with the lowest loan constant so you can create the biggest spread. And a spread, by the way, in real estate is the difference between your cap rate and your loan constant. That's what a spread is. But back to rental properties, they're great. As long as the cap rate's high enough and you can finance them with the right financing and create that positive spread like I'm talking about, they're great. Some niches and some sectors within real estate are going to have higher cap rates than others. So it depends on what the purpose of that asset is in your portfolio. So at the end of the day, as investors, you want to be investing for cash flow, but you also want to be investing for appreciation, right? So you want to have both of those built into your portfolio. That's the beauty of real estate, is that, if you're buying at the right time and you sell at the right time, or maybe don't even sell ever, you're just accumulating and building equity and leveraging strategically to acquire more. You have cash flow and appreciation built in. So rental properties are great. And, there's a reason why, real estate is so amazing. And the asset is great, but what's really amazing about real estate, whether it's single family or multifamily, is the way you can leverage other people's money to buy it, to acquire it. It's at the end of the day, it's not actually this is what we teach with Hacking Finance. It's not actually the asset that makes you rich. It is not the asset that makes you rich. It is actually the financing that makes you rich. It is the way you strategically finance these assets that will ultimately make you and the investors you work with, if you're raising private capital and investing private capital into deals, it is the way you structure your capital that will ultimately determine your success or failure as an investor. So I love single family. I love real estate. I love multifamily. Storage units are great. Mobile home parks can be great. There's so many different niches within real estate that can be extremely profitable. And at the end of the day, it's about understanding how to crunch those numbers, analyze those deals, decide what makes the most sense for the results you want to create, and then really understanding how to finance things strategically to generate not only the highest return, because so many investors are so focused on return. We're conditioned to look at return, right? But it's so crucially important that as investors, you know how to measure and mitigate and cover the downside, measure your risk as well. And there's real specific ways that you can understand how to measure risk and how to mitigate it financially.
So I want to ask the question I have in my mind right now is, you mentioned that in real estate, there is, you got to buy good, you got to buy for cash flow and purchase properly. But then you mentioned the finance instrument, like that finance instrument is actually how you're making your money. So how, like, that's how everybody gets rich. Like that's how, anybody who thinks, oh, the big financial companies, all they're doing is selling these shitty products, and the only person who gets rich in the end is the person who sold you the product. That's kind of the reality of everything, right? Like if you can create a really good financial product for yourself, then you can actually be in a really good financial situation, right? Like the people selling the financial products just got clever and found a great, clever way to sell it. You can do the same thing with the products and tools you're already using. Just you've got to finance them cleverly so that you have more. Paul, before we jump into the next section where I ask a really good question, I want to know, what is the easiest way somebody can learn more about finance hacking finance, and you and George? What is the easiest way to find out more about you guys, connect with you, and if they wanted to learn more or utilize some of your programs, what's the easiest contact information?
Yeah, as far as contact information, you can just hit me up on. We're on Facebook Live right now, so you can hit me up on Facebook. Send me a private message, and you can also go to paulrossano.com. You can send me a message there. So yeah, either way is great. Social media or directly to my website is a great way to contact me.
Awesome. So paulrossano.com, or get him on Facebook. He responds via Messenger. In fact, that's how we started our conversation. So he's very responsive and great information. Start finding out, like, learn more about what you're doing with your money, because if you don't, somebody else will, and it won't be your money anymore. It'll be theirs. So getting clever with it is your responsibility. It's your key. And if you do that, if you hack finance the right way, you can have whatever you want. It's just a matter of learning the rules, learning the principles. And if you learn them on small stuff, maybe it's one building, eventually you can own a lot of these, right? You can have hundreds of these things if you finance it the right way. If maybe real estate isn't your thing, which, why are you even listening to this podcast? But if you're into cryptocurrency and you want to get more of that stuff, right, you can use hacking finance to be able to leverage more. Same with one of my other favorite assets, gold. You want more of this stuff, hack finance. You have access to it. Or if you're basic, just like everybody else, and you just want more cash, you just want a little more cash in your pocket, then utilize the laws around debt, utilize the laws around these things, around mortgages, around HELOCs, and like some of the stuff you were talking about the other day on the Boston RIA was just, you gave so much information away, so phenomenal, Paul. So like, so far, you've even today over delivered already. But I want to ask you a question that's really powerful, that's helped a lot of the people who listen to this. If you could go back to 20-year-old Paul, if you go back to your young self and say, look, these are the 3 pieces of advice. If you follow these 3 pieces of advice, you're gonna be financially free in your 30s. Like by 25, you'll be rich, millionaire. What 3 pieces of advice would you go back and give yourself? Or if you had kids today, what would you give your 20-year-old self that information?
That's a really great question. Got me thinking here this morning. Okay, so let's say, I would say focus on, for me personally, is focus on stability first. Spend your time and your energy and your life force focusing on things that are stable and predictable. Get that foundation created for yourself before you start focusing your time and energy and effort onto things that might be a little more risky and a little bit more unstable. And early on in my career, I focused a lot of time and energy on building a startup business that had some success, but ultimately became a drain and didn't yield the results that I thought it would. I wish I just spent more of that time focused on real estate and on building a more solid real estate portfolio. And inside of that, understand what stability is, what volatility is, where to focus your time and attention. That's what's great about real estate. So over the long term, it's one of the most stable asset classes possible. And understand this underlying reason why you're going to be successful, or you're going to maybe crash and burn with real estate, because, understand the financial system, essentially. Understand how the financial system works. Understand the power of knowing how to finance and how to structure capital for your investments. So those are 2 of the biggest things. And then I'd say the third thing is continue, work on yourself, which is something that I feel blessed and grateful that I did do and have been doing for the last 20 some odd years. Continue working on yourself and surround yourself with people that inspire you. Surround yourself with people that are going to lift you up and raise you up and inspire you to be better every single day. So those would be, I'd say, the three foundational things that I would tell myself 20 years ago.
I love that, because those three pieces of advice that transfers to anyone at any age, no matter where you are. If you focus on things that are stable, and I don't mean like a stable job. Like I'm talking about what Paul's saying. If you focus on things that are stable, as in the information stays the same, as in the asset class is very stable and creates a return. If you focus on understanding how money works, like hacking finance, and then you understand your relationships are key. You will become the people you spend the most time with. In the millionaire mission, the 100 millionaires mission that we have, Alchemist Nation, like the whole concept is, how do we build more millionaires so that we can be surrounded more millionaires? How do we surround ourselves more millionaires, whether we're building them or we're reaching out to them? How do we add value to the people who already are millionaires, and seeking out more people around us so that you can have a better network? Like Paul, you just nailed it. And I want to remind everybody, if you're at home right now and you got value from this, what Paul said, give us a thumbs up, click that button, hit the thumbs up button, hit the heart button, give us the heart, or share it with somebody. People that are close to you want to be better. They want to know more. They want to learn more. And if you're afraid to share with them, then they're going to stay in their cycle of not knowing any better. And I think that's a dangerous place, especially where the economy is moving. There is inflation, there's deflation, there's stagflation. There's things that are eating away at your dollar right now that you don't even know about. The taxes that are being put on you, the float we didn't even talk about today. But if you want to learn more about float, you can talk to Paul. You can follow his posts. And he's a very, very informative person. Be thankful that people like him are out here willing to give their information, and you want to reach out to them. If they have a product that you can purchase, it's your opportunity. It's not a cost, it's an investment. I've said over and over, the best investment I made was up here. And Paul, joined coaching programs, and he's been all over the country, and now he gives that same content. And with his experience of what's happened, I would, for you as a listener, set the goal to one day be able to give, one day be able to teach, one day be able to share, spread the mission, teach more people about how to build wealth so that they can get free the way I want you to be free. You're a future millionaire. You're able to get to that next level. On Alchemist Nation podcast, we make sure we interview the best people who are in a position that we want to be in. So Paul, you are an alchemist. You have the ability to turn people into gold. You have the ability to teach people who have, maybe led in the past. Maybe they just have leads and they're looking to get into a silver or a gold position, maybe a platinum position in life. So Paul, you certainly are an alchemist. Thank you so much for your time today, man. Appreciate you.
Such a pleasure, Walter. Thanks for having me.
Definitely, brother. Cheers.
All right.